Nothing but central banks. After ECB and RBA this week, central banks in United States, Japan, United Kingdom, and Swiss will have monetary policy meeting and interest rate decisions. Investors and traders will mainly focus on Wednesday's Fed announcement and Fed Chair Mr. Powell's press conference. Besides central banks meeting, we also have many other data to watch, making this week the most crucial week in June. I am Ahura and will review the most important events of the week and their effects on the markets. Number 1. UK GDP. Increasing energy prices can affect the overall GDP, but how? This is precisely what many investors want to see. In March, GDP was not very pleasant. However, it was somehow expected, as in previous weeks, we could see the weakness in retail sales and PMI numbers, while UK consumer confidence also is at its lowest historical level. At the same time with the GDP, we also have to watch the industrial and manufacturing production. Overall data is expected chiefly not to be okay and put the pressure on the UK stock markets and pound. Number 2. US retail sales. Retail sales in the past month had an exciting story in the US. With a 0.9% increase in April, it could print the fourth month in a row of increases and is expected to see the fifth increase in May as well. However, it's nominal increase. Since retail sales are reported in nominal terms, it's also essential to see the ratio to inflation. Considering the inflation above 8% in the past months, we should not be much happy about these upsurges. Since the market will focus on the Fed meeting, we expect not meaningful reaction to these numbers. Number 3. FOMC meeting. U.S. Federal Reserve Open Market Committee will hold its monetary policy meeting and interest rate decision this week on Tuesday and Wednesday, with its final announcement on Wednesday. Since the market is already aware of its 50 basis point rate hike, now mostly focus will be on other things. We must focus mostly on dot plots, Fed economic outlook, and comments about the September rate hike. Since economists doubt on inflation peak, the Fed is expected to back off from its earlier comments of pausing the rate hikes in September. Let's not predict and wait for the meeting. Number 4. Swiss National Bank. SNB and BOG are the only central banks among developed economies that still have maintained their negative interest rates. For this meeting, it's expected that the Swiss National Bank will hold its minus 0.75% rates. However, with deteriorating situation in Ukraine, the announcement must include some hawkish tones as well, which can lift the franc against its crosses. Number 5. Bank of England. The second central bank that will hold the meeting on Thursday is located in London. The United Kingdom in general doesn't have suitable condition now. Despite surviving in the confidence vote, Prime Minister Johnson has a sleeper position while inflation is increasing and GDP surprisingly was down in the previous month with lowering retail sales. Despite all, for this meeting, we still expect that BOE remain on course of further rate hikes, which would increase the pressure on the UK stock markets. And finally, number 6, Bank of Japan. In the past week, we had unexpected comments from BOG's governor, Mr. Kuroda. He said that Japanese economy still needs support and BOG can continue its accommodative policy. Even though he was not happy with the yen value against its crosses, it doesn't appear to be a central bank's priority in Japan. For this week, we are still expecting a very accommodative policy stance with holding the rates unchanged, which will hold the pressure on Japanese yen. Thanks for watching this video and hope this week going to be an amazing week for you.